failure. Students?
Yes, sir.
Students?
Yes,
Is it
sir.
okay now?
No, sir.
No. Hold on. Wait, wait for a minute. Now it's okay. I want to share the screen. I want to share screen. The interruption was there. Now that we are discussing the paragraph 3, right? That the auditor according to the paragraph 3, we are discussing the purpose of audit of audit on the financial statement, right? The purpose of audit, that auditor express an opinion is through this report, express an opinion. Opinion is when you express opinion, you should state whether the financial statements are prepared, all material respect, comply with the financial reporting framework. That is one thing. Other one is the general purpose framework include the auditor should state whether financial statements are showing true and fair view. True view, Satya Sadharana, Unmayum, Nirmayum. That is a common word used by all audit report by the auditor, right? That is called true view and fair view. Fair view means that auditor should consider the users of financial statement. This financial statement should be fair to all, right? Some parties want to purchase the business. Some want the bank. Some financial institutions lend to the audit entity. So they also rely on the financial statement. So we must consider, the auditor should consider the users of financial statement. It should be fair to take some decisions, right? So these are the matter given in the paragraph 3. Then an audit conducted in accordance with Sri Lanka auditing standard and relevant ethical requirements enables the auditor to form that opinion. So auditor, second requirements, auditor according to the standard should conduct audit in accordance with Sri Lanka auditing standard. So in any audit report, you can find this word. We are stating that our audit was conducted in accordance with Sri Lanka auditing standard. Every audit report you can find this word, right? Then auditor should comply some ethical requirements. So what are the requirements, ethical requirements? What we discussed last class, what are the ethical requirements? In addition to independence, integrity, objectivity, professional behavior, competency, due care. So those are the independent, integrity, objectivity, due care, professional due care, competency, and confidentiality. Those are the requirements. We'll study later. That last class we discussed those ethical requirements. So auditor should comply with ethical requirements. Without this is called basic principle. Without this principle, adapting this principle, you can't carry out this audit. You can't complete this audit. So that auditor should carry out the audit work in accordance with Sri Lanka auditing standard. Planning the work, conducting the work, reporting the work, every stage, the auditing standard is important. Obtaining evidence, opinion, basis for opinion, type of opinion, everything based on the auditing standard. So you should know, right? Without knowing standard, you can't be an auditor, right? So you can't do the audit. So that is why the standard is giving basic principles or guideline how to carry out this audit, plan this audit, performing this audit, reporting, everything. Standard is important. So this is the paragraph number 3. I hope you understood the paragraph number 3. Paragraph number 3 is dealt with the purpose of audit on the financial statement. I hope you are having that hard copy of this standard. Then this second paragraph, this dealing with the subject matter that what we discussed in the earlier class, the assurance engagement. One of the element of the assurance engagement is a subject matter. Subject matter is a financial statement. Who is responsible for the financial statement? Auditor or client? Who is responsible? That is the paragraph 4 explain responsibility of the preparation and presentation of the financial statement. Those responsibilities rest with whom? Can students answer this question? The preparation and presentation of the financial statements, the responsibility is rest with whom? Who is responsible? Students, you should answer. Students, කවුද prepare කරන්න ඕන? කිනිම් මුදල් කිනිම් කවුද prepare කරන්න ඕන? Auditors or ආයතන කට්ටිය? யார் அதை prepare பண்றது? Auditor prepare பண்றதா financial statements அல்லது audit செய்கிற நிறுவனம் செய்கிறதா? Who is responsible? Students, I don't know whether you are in the class or not. Unless you answer this question, I can't proceed. Students, very good. Organization, right. So, this responsibility is rests with the management of the organization, not to the auditor, right? The financial statements subject to audit are those of the entity, right? Prepared by management of the entity with oversight from those charged with governance, right? So, charged with governance means governing body. If it is a university, governing body is a council. That responsibilities rest with the council of the university. If it is a company is full responsible for the preparation and presentation of the financial statement is given to the board of directors, right? So, governing body. Sri Lanka auditing standard do not impose responsibility on management or those charged with governance and do not override laws or regulations that govern their responsibility. So, any law or rules override this responsibility. They are compelled to prepare this. Every rules required to prepare the organization. So that is why the governing body should sign in the financial statement, right? The governing body, council members, council, before submit to the auditor of the financial statement, a council should approve. After that, council member, the vice chancellor and chief, the bursar, registrar, everybody sign. So that is a management responsibility. However, an audit in accordance with Sri Lanka auditing standard is conducted on premise that management and where appropriate, those charged with governance have acknowledged certain responsibilities that are fundamental to conduct for the audit. This is the fundamental. You should know who should prepare the financial statement. How to prepare the financial statement? Like auditing is in accordance with the Sri Lanka auditing standard. If the organization is a specified business enterprise, the specified business enterprise, the university also specified business enterprises, that financial statement should prepare in accordance with Sri Lanka accounting standard, right? So they should comply. That is a legal requirements. When you prepare the financial statement, you should comply the Sri Lanka accounting standard. So the financial statement, when you are submitting financial statement, you should state the wording the financial statements are prepared in accordance with the Sri Lanka accounting standard, right? Or if they are unable to comply any standard, that matter also specifically stated, right? So this is this paragraph basically responsibility for the preparation and presentation of the financial statement that is rest with the audit entities management or governing body, right? You can't relieve from this responsibility. That is the second one. Second one, the standard stated responsibility of financial statement. That is a second paragraph explain this. Third one, that every paragraph there's a explanatory notes. That the fourth paragraph explanatory notes given A2 to A11. That is the ethical requirements, right? So the fifth paragraph relating to the auditors given reasonable assurance. Reasonable. We last class we discussed what type of assurance auditors can give. Is it absolute assurance or reasonable assurance? You should understand what are the differences between absolute assurance and reasonable assurance. Is it possible to give absolute assurance by the auditor? It is not possible. That is a limitation of audit, because auditors are examined not 100%. Audit is a test-based audit. That is why auditors is unable to give a reasonable assurance. Other reasons, there are so many reasons. Other reasons, any evidence is not a conclusive evidence, right? Some evidence are persuasive than the conclusive evidence, right? So, likewise, several reasons, right? So that is already discussed. Several reasons auditors are in a position to give a reasonable assurance, right? Reasonable assurance, not giving a absolute assurance. Absolute assurance now, 100%. Even the audit is completed, there is no fraud, no error. 100% it is perfect. That is not possible. You can assume that audit is completed, right? 100% monohari vata the වංචාව වැරදි මොනවා හරි තිබුණනම් auditors අල්ලගන්න පුළුවන්. That is not possible, right? So sometimes management also involved, planned very well planned fraud, unable to detect the auditor. So that's why the auditors are given reasonable assurance, not absolute assurance. There are so many reasons, right? So auditors are giving reasonable assurance. So to give a reasonable assurance, whether the financial statement as a whole are free from material misstatement. So whether auditors when he giving an opinion, he should state whether the financial statements are free from material misstatements. Material misstatements, right? This is called based on the evidence, auditors come to conclusion based on the sufficient and appropriate audit evidence. We'll discuss later what is sufficiency and what is appropriateness, right? So based on the sufficient and appropriate audit evidence, right? Auditors give this assurance, reasonable assurance, right? Always auditors try to uh, maintain, try to uh, try to have a risk at low level. What is audit risk? Audit risk විකින අවදාන. මොනවද? This wording are important. විකින අවදාන. කණක්කායු ආවත්. මොනවද? Can anyone say that earlier I explained? විකින අවදාන. මොනවද? Audit risk නම් when the financial statements are materially misstated, auditors express incorrect opinion. Baradi opinion dunnana, that is a risk to the auditor. That ஒரு பிழையான அபிப்பிராயத்தை ஒரு ஒப்பீனியனை கொடுத்தீங்கன்னா நிதிக்கூட்டுகள் தவறான கூட்டிற்கு பிழையான ஒப்பீனியனை கொடுத்தா அது சொல்ல ரிஸ்க் சொல்லி ஆடிட்டர்ஸ் மே பி sued. ஆடிட்டருக்கு எதிராக வழக்குகள் சுமத்தப்படலாம், குற்றங்கள் சாட்டப்படலாம். That is why risk auditor try to avoid have a risk at minimum level, low level. You can't avoid this risk. Risk is there. We'll discuss later. There are three components of risk: inherent risk, control risk, retention risk. There are three types of risk. Auditor, it is not possible to completely eliminate the risk, audit risk. There may be a risk, but you can have a low level, right? You must have a low level. Okolu tanagandono mono the vikna avadananan mono, right? Kanakai vabathandalen. What are the components of the risk? Or what type of audit risk, right? So, auditors checking financial statements are free from material mistake, right? When you consider, you must think about the risk, appropriate level, acceptably level, low level. Reasonable assurance is not an absolute assurance because there are inherent limitations of an audit which result in most of the audit evidence on which auditors draw conclusions are basis of auditor's opinion being persuasive rather than conclusive. That any evidence beginner charts here, not a conclusive evidence. If you take, when you check the purchase of computers, one of the evidence parichakar and owner invoice. If you purchase 10 desktop computers, invoice balanakota price, quotation, everything, GR and everything, balanakota auditor can satisfy. Sometimes the invoice may be where the invoice. Invoice එක හරියට check කරනකොට that address may be the particular address, there is no shop. 144 Main Street, Kathangudi. Sometimes it is not a, by auditors when you check, that is not a computer dealer shop. That is a fancy shop sometimes. Sometimes for the particular address there is no shop, but the invoice is there. Is it conclusive evidence? No. So any evidence, எந்த ஒரு சான்றும் ஒரு முற்றுமுழுதான சான்று இல்லை. Any evidence is not a conclusive evidence. That is why auditors are not in a position to give an absolute assurance. Understand? This is a limitation in audit. අපිට හරියට 100% එක විශ්වාස කරන්න බෑ any evidence. It is not possible unless you suspect only. You might check the shops. The invoice given by the particular supplier, only suspicion only you can check. Otherwise, is it possible to check each and every invoices? It is not possible. Evage, good received note after Badu stores after receiving the goods by the storekeeper, only issuing the goods received note. When the accountant making a payment, check current owner GRN invoice or a copy of documents බලනකොට පස්සේ තමයි payment කරන්න පුළුවන්. Sometimes storekeeper without receiving a goods, sometimes goods received not is there. This document showing the goods as received, but actually not received, but he has signed and everything. Sometimes management also say, management also inform to storekeeper, you submit the invoice, the goods received not, we can later, they will agree to supply later, you can make a payment. So, this every document is not possible to all goods received not checked by the auditor properly. It is not possible unless otherwise suspicions arise or complaint comes, only the auditor can check thoroughly. So auditors is giving a reasonable assurance, not absolute assurance. Absolute assurance not possible. Not possible. Why not possible? The evidence is not conclusive evidence. Any evidence, any charge here, not a conclusive, persuasive. Persuasive means again and again you have to take some evidence. So that is why auditors are express reasonable assurance. Kariyata Tanagandona, right? Auditor express Matya Denakota, Kian owner, right? Kian owner, these financial statements are free from material misstatements, right? Other one is materiality. That's also important. What is materiality? Accounting also is one principle, materiality, right? Auditors should consider this concept of materiality. Where it is applied. Audit planning karnakota, you must check every material amount, right? If it's a material matter should be considered the planning phase, audit planning, and performing audit, and evaluating the effects of the misstatements, right? And uncorrected misstatements in the financial statement. Every stage auditor consider this material. In general, misstatements including omissions are considered to be material. If individually or aggregated, they could reasonably be expected to influence the economic decision of users taken on the basis of the financial statement. Materiality is depending on the economic decisions of the users of the financial statement. That is, you must thoroughly understand what is material. When the auditor think about materiality, right? Omissions. Some transactions are omitted in the financial statement. Are you consider this? Is it serious or not serious? Depending on the material. Certain sales item not brought to the accounts of financial statement. Certain expenditure not brought to the financial statements. Certain illegal expenses not shown in the financial statement. Certain contingent liability not disclosed in the financial statement. So, if it is a material, only auditor consider. If it is not immaterial, no need to worry about that, right? It won't affect the auditor's opinion, right? So you should know materiality means the economic decisions of the users of financial statement. On that point, we must check the materiality, right? So materiality concept also important. That is depending on the size of the organization, nature of the business, right? If it is a certain organization, 10,000 immaterial or 1,000 immaterial. But certain organization, 1,000 rupees is a material. So nature of the business, nature of the organization, right? That is the material depending on the size and nature of the misstatement or combination of the both. Auditor's opinion deals with the financial statement as a whole, and therefore the auditor is not responsible for the detention of misstatements that are not material of the financial statement. Even if you are charged or if you are answerable, not detect this fraud, you can say this is immaterial, right? He is not a responsibility. So there are other standard also there. Materiality, auditing standard also there. Material, separate standard there, right? So how to determine the materiality levels, right? So some organization that the software is there to decide the material. In our government audit also, some package is there, right? Based on that, we measure the materiality. If it is a material only, we must point out as a qualification, audit qualification. Otherwise, we are not responsible to report at those matters. So you should know about this. Auditor consider on the material. So you should know what is material. Then the auditor, according to the standard, require that auditor exercise professional judgment and maintain professional skepticism throughout the planning and performing the audit, and among other things, right? We'll study in detail this. In this standard, there are 4 paragraphs dealing regarding the professional judgment and professional skepticism, right? That definition also there, right? This principles, right? The standard requires that the auditor exercise professional judgment. That is professional judgment is very, very important. Some judgment may be differ to the among the professional person, right? So, for example, diagnosing. If you are the patient, right? If you affected some diseases, one consultant diagnose these are the reasons. Other consultant diagnosing some other reasons. So this is a professional judgment. Maybe may differ from person to person, but you can't challenge this, right? So that is called professional judgment, right? So professional judgment also important in the planning stage, performing stage, and reporting stage. Professional judgment and professional skepticism. We'll discuss later what is professional skepticism, right? You must exercise both. Right? Mm. The auditor may also have certain other communication and reporting responsibilities to users, management, those charged with governance, or parties outside the entity in relation to the matters arising from audit. The auditors are not only reporting to the auditing entity, sometimes outside the parties responsible to report or communicate the users of the financial statement. Management, sometimes certain internal control weaknesses are there. Through management letter, he informed these are the weaknesses, these are our recommendation. It is called management letter. That is some other communication with the management or those charged with governance or parties outside the entity. So you must keep in mind, auditors are not only reporting to the client, right? But he has right to communicate or reporting to the users of financial statement, management, or those charged with the governance, right? So this is the overall objective of auditor. There are two objectives according to the standard paragraph 11.
Recording stopped.
According to the standard, there are two objectives of the auditor, right? You should thoroughly understand and thoroughly knows about this statement, right? So the earlier we discussed purpose of the auditor. Here, overall objective of the auditor in conducting an audit of financial statement, the overall objective of the auditor are one, to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enable the auditor to express an opinion on whether the financial statements are prepared in all material respect in accordance with an applicable financial reporting framework. So first is to obtain reasonable assurance. To obtain reasonable assurance. What are those assurance? Whether the financial statements are taken as a whole, free from material misstatement due to fraud or error. Free from, அதாவது கணிசத்தன்மையான வழக்கல் மோசடிகள் தவிர்க்கப்பட்டிருக்கிறது. Material, it is eliminate or free from material misstatements, right? Due to fraud or error, right? Second one, the financial statements are prepared all material respect in accordance with the applicable financial reporting framework. There are two aspects. Mathya Denakota, auditor, Tanagandona, these two things. One aspect is financial statement free from material misstatement due to fraud or error. Second one, right? Second one, these financial statements in all material respects prepared in accordance with the financial reporting framework, right? That is to obtain reasonable assurance. Assurance for what? For who? Assurance for two reasons. One is financial statements are free from material misstatement due to fraud or error. Second one, all material respect financial statement prepared in accordance with the financial reporting framework. Right. That is one objective, reasonable assurance. Second objective, The report on the financial statement. Report on the financial. Report on the financial statement and communicate as required by Sri Lanka auditing standard in accordance with the auditor's finding. Report on financial statement. Auditor's finding. මොන issues, මොන අඩුපාට, මොන වැරදි, වංචාව, not compliance with the laws, rules, regulations. Everything, every observations or the findings you should report. You can't keep it silent. So every findings should be report. That is called audit report, right? You can see the website. From the website, the National Audit Office website, there are several, every year, more than 1,500 audit reports issued, right? So, ඕගොල්ලෝ දැනගන්න පුළුවන් මොනවද අඩුපාඩු මොන අඩුපාඩු. If it is a university, 17 universities, මොන major issues are there, right? The provincial council, මොන අඩුපාඩු. That ministries, departments, corporations, state banks, all ආයතන audit report බලනකොට ඕගොල්ලෝ දැනගන්න පුළුවන්, right? So මොන issues, findings, auditors' findings are, right? Accounting deficiencies, right? So many accounting deficiencies, unauthorized transaction, non-compliance, systems control weakness, internal control weakness, unauthorized transaction, idle assets, asset management, so many mistakes, accounting, so many mistakes, right? So every varta you can see these findings. So there are two reasons, right? Auditors' objective on the overall objective of the auditor on the financial statement. One is obtain reasonable assurance. Second one, report on the financial statement. That is called communicate to the management. I hope you understood this up to now, students. Can you understand this? Overall objective of the auditor according to the standard, right? Then we will discuss some according to this standard. We try to understand some terms of definition. These are the important to each and every standard. To understand the contents of each and every standard, you should know these definitions. But without this knowing the definition, it is difficult to understand other standards, the contents of the other standard. First is applicable financial reporting framework. Definition: applicable financial reporting framework. There are so many exams, university exams, professional exams, chartered SEMA, WAT exams, government competitive exam, recruitment exam, government accountant service, audit service, all the exams, these type of definitions are tested, right? So, first one, applicable financial report framework. So, Can anyone read this? Students, can anyone read this? Your previous class, last batch, students are contributed to read this. Easy to explain to me if you someone read it. Students, there are 76 students in this lecture. In this lecture program, there are 76 present. So anyone can read this paragraph. If you are not contribute or share with me, I will read the financial reporting framework adopted by management and where appropriate, those charged with governance in the preparation of financial statement that is acceptable in view of nature of the entity and the objective of the financial statements or that is required by law or regulations. So, applicable financial reporting framework means that is adopted by the management, not others, right? Not the auditors or other party. Adopted by management or though where appropriate, those charged with governance in that governing body, board of directors or council, right, governing body. Why? Those framework is applicable in the preparation of the financial statement. Preparation of the, you can't, if you are an accountant in the organization, you can't prepare the financial statement in your own way. If your own way, disregard the all rules or regulations, laws, that is wrong. That means your financial statements not in accordance with the applicable financial reporting framework. The framework means that the framework accepted by management and accepted by those charged with governance in preparation of the financial statement that is acceptable in view of the nature of the entity. Nature of the entity. This financial reporting framework depending on nature of the entity and the objective of the financial statement or that is required by law or regulations. So it depends on nature of the organization, right? Objective of financial statement or required by law or regulations, right? This is called applicable financial reporting framework. Applicable financial reporting framework is adopted by the management, right? Adopted by the management for those charged with governance in preparation of the financial statement that is acceptable in view of the nature of the entity and objective of the financial statement or other required by law or regulations. So banks, if you take all the state banks, that is guidelines given by the central bank and banking act. That requirements or to prepare the what is the framework is depending on the regulations. Right. I hope we understood this. Other one, there are some more matters given here, right? Fair presentation framework and compliance framework. There are two types of framework called fair presentation framework and compliance framework. There are two types of framework. Fair presentation framework and compliance framework. There are two types, right? Uh, Fair presentation framework is used to refer to a financial reporting framework that requires compliance with requirements of the framework, right? Financial reporting framework that requires compliance with the requirements of the framework. That is, there's a compliance requirements are there, right? That is to acknowledge explicitly or implicitly that to achieve fair presentation of the financial statement, it may be necessary for management to provide disclosures beyond those specifically required by the framework. According to this framework, management can disclose beyond the specifically required. That requirements is this, but management can disclose beyond the requirement, specifically required requirement, that framework, the fair presentation framework. Other one is acknowledge explicitly. It may be necessary for management to depart from the requirements, deviate from the frameworks to achieve fair presentation of the financial statement. Such departures are expected to be necessary only in extremely rare circumstances. Sometimes there are requirements, financial reporting framework requirements. Sometimes you can't follow this. You may depart from these requirements to achieve fair presentation of financial statement. Such departure are expected to be necessary only extremely rare circumstances, right? That is called fair presentation framework. Other one is compliance framework, used to refer the financial reporting framework that requires compliance with requirements of the framework but does not contain the acknowledgement one more two. You must compliance. These are the compliant. Compliance means to be followed, must be followed. Certain requirements must be followed, must be compliant. That is called compliance framework. That is fair presentation framework and compliance framework. Fair presentation framework, certain things you can disclose beyond the requirements. Certain things, second one, certain things you are unable to follow this, unable to disclose, unable to satisfy these requirements with a fairly reasons. You can departure from these requirements based on the fair, extremely circumstances, right? So two type of frameworks are there. Then audit evidence. One of the charts here. This there are separate standard is there. Sri Lanka auditing standard 500. In the standard, we will study in detail what is audit evidence, what are the types of evidence, how to obtain evidence, what are the audit tests to be carry out to obtain audit evidence. Several matters we will discuss in the SLA US 500. But this is the, according to this standard, first standard, you try to understand this definition. What is bigness art here? Audit evidence. What is audit evidence? What is audit evidence? Can anyone state what you can understand this evidence? You should share with me why evidence. Why evidence? Tamai, students, please tell me why evidence is. I am not asking what is evidence. Why evidence? Generally, not think about auditing. Generally, If you want to prove certain matters, the court, you have to produce evidence. Sometimes you may murder someone. If there is no evidence, you may escape from the eyes of the law. That judgment, all the judgment is based on the evidence. If you are guilty, right, you must prove. Likewise, auditors also giving judgment on the financial statement. When you are giving an opinion based on the evidence, you must come to a conclusion what type of audit opinion can be expressed. Unmodified opinion or modified opinion, qualified opinion, adverse opinion, or disclaim opinion. Whatever the opinion is based on the audit evidence, right? Evidence is not available. Sometimes Eastern University finance branch destroyed by fire. Mokut nahi. Documents, books, records, files, mokut nahi. Evidence ganda පුළුවද? සාක්ෂිය පුළුවද? මතය දෙන්න පුළුවද? So you are not in a position to express an opinion on the financial statement. So you can disclaim an opinion. You may say we are unable to express an opinion on the financial statement. So evidence is very, very important to the auditor, right? Without evidence, auditors are not in a position to express an opinion. Unable to give an audit opinion. Material audit evidence is not available. Lack of evidence. Right? So, auditors come to a conclusion or decide the basis of opinion is depending on evidence. Understand? This is the introduction about evidence. Now we will see the definition of the evidence. Definition of the evidence. Evidence is the information. Evidence is the information used by the auditor in arriving at a conclusion on which the auditor's opinion is based. On which the auditor's opinion is based. Audit evidence includes both information containing in accounting records, underlying financial statement, and other information for the purpose of auditing standard. So, according to this definition, audit evidence means information used by the auditor in arriving of the conclusion. Conclusion. What conclusion? The opinion on which the auditor's opinion is based. On which the auditor's opinion based. Audit evidence include information contained in the accounting records, underlying financial statements or other information. Sometimes visible information, invisible information, documentary information. So many informations are there. So basically, evidence is information obtained by the auditor in arriving an opinion on the financial statement. That is a base conclusion. Conclusion, basis for the conclusion, basis for the opinion. That is called audit evidence. Right. So, this one you must be careful. Audit evidence, the examiner requested to define audit evidence. You can't write something in your mind, right? So what is expected, what is carries marks only the what standard, what is given in the stand, right? So other than this, no marks, right? So you must be careful. You must memorize. So you should memorize this. What is evidence, right? Sometimes you may understand, but when you write down, so problem that under this evidence, two things are there: sufficiency and appropriateness. Evidence, two things are there according to the standard. According to the standard, we will study in detail when we discuss SLAS 500. According to the standard, auditors should obtain sufficient and appropriate audit evidence. So evidence is when you obtain evidence, sufficient means numbers, appropriate means relevance or reliable, right? So if you want to your audit risk at the low level, auditors should obtain sufficient and appropriate audit evidence. Sufficiency of audit evidence is the measure of the quantity of audit evidence. The quantity of the audit evidence needed is affected by auditor's assessment of the risk of material misstatement and also by quality of such evidence. So sufficiency is depending on audit risk. If it is a high risk, you have to take more evidence. If it is a low risk, you have to take less quantity of evidence. That's positive relationship, right? We will study later, right? Positive relationship, sufficiency, quantity of the evidence, and audit risk, right? Then quality. If it is a high quality of the evidence, you must take few quantity of the evidence. Viswasa high na adu thamai, few evidence enough. Viswasa, that is reliance or quality is very less. That those evidence are qualities very less quality. You have to take more evidence. That's negative relationship. We'll study in later. That is called sufficiency. Sufficiency is quantity, right? The appropriateness is the quality, measure of quality of the evidence, right? Or reliability is providing support for the conclusion, right? Sometimes external evidence is more reliable than the internal evidence. Outside that is more reliable. So for example, bank statement is more reliable evidence than the organization, or evidence obtained from the organization. Likewise, written evidence is more reliable than the oral evidence. Likewise, copies, the original is more reliable than the copies. Sometimes internal control system very efficiently is there. That evidence also very strong evidence. Likewise, that appropriateness means the quality of the evidence, that is the reliability of the evidence, that depends on the relevance, right, and reliability. Relevance and reliability, those evidence is reliable and relevant is called appropriateness. So these are the both sufficiency and appropriateness. How many evidence should we take? What are the evidences, appropriateness? Those decisions are the professional judgment. Ultimately, the professional judgment. Right. We'll discuss later. Right. So you over the then what is the definition of audit evidence? So what is sufficiency and what is appropriateness? When we speak about audit evidence, you should know sufficient and appropriateness. Other one is audit risk. According to the standard, other definition, you must know the audit risk. Vikina Abadan, Anakayu, Abaya. Audit risk. Audit risk. Audit risk that auditor express an inappropriate audit opinion when the financial statements are materially misstated. Make a Varadi opinion Dunana Mudalkinim materially misstated. Financial statements are materially misstated. Auditors are given inappropriate opinion. That is called audit risk. Right? Audit risk is a function of the risk of material misstatement and the detention risk. This is a function of the material misstatement. Right? And detention risk. Certain matters are unable to detect. That is why risk. Right? So function of the material misstatement and detention risk. That is called audit risk. The definition is must be careful. That when you define the marks, full marks may be given for both points. One is what is audit risk. So when the auditors are giving inappropriate opinion when the financial statements are materially misstated. Audit risk is a function of the material misstatements and detention risk. These 2 points included in the definition only, you can gain full marks. Right. Then auditor. Auditor is a person. Auditor na dhanwa uppadu. Auditor na dhanwa, you must define the person or persons. Person or persons conducting the audit. Usually the engagement partner. This is a very important point. Usually the engagement partner or other members of the engagement team or as applicable the firm. 3 things included. Maybe audit firm, maybe team members, engagement team members, or partner of the engagement partner, or other members of the engagement team as applicable the firm. It may be a person or persons. Where an auditing standard expressly intended that requirements or responsibility be fulfilled by the engagement partner, right? The team, engagement partner, rather than the auditor is used, right? So, according to the standard, requirements or responsibility be fulfilled. Answerable. Responsibility be answerable by the engagement partner. Sometimes there is a mistakes when you carry out auditor. Who is responsible? Engagement partner. The term engagement partner rather than auditor is used, right? Engagement partner and firm are to be read as referring to their public sector equivalents where relevant. Sometimes public sector auditing also this auditor may be used. Detention risk, the risk that a procedure performed by auditor to reduce the audit risk to an acceptably low level will not detect the misstatement that exists and that could be material either individually or when aggregated with other misstatements. Detention risk, the procedure you perform by the auditor to reduce the audit risk to an acceptably low level will not detect a misstatement. Will not detect the misstatement that exists. Because the misstatements are exist and that could be material. That misstatements are material either individually or when aggregated with other mistakes. So, if you are unable to detect the misstatements, that is called detention risk. Even though you are plan and perform the audit to reduce the risk at low level, right? Low level uh, will not detect the mistake that exists, right? That could be material either individually or when aggregated with other misstatement. That is called detention risk. Then later the financial statements. Financial statements, the accounting standard also given that what included in the financial statement, right? You are very well known about this financial statement from the GCO level. If you are taking accounts from that period onwards, you know very well what is financial statement. But when you define, you must state this: a structured representation of historical financial information. Structured representation of historical financial information, including related notes intended to communicate an entity's economic resources or obligation at a point in time or the changes therein for a period of time in accordance with the financial reporting framework. In accordance with the financial reporting framework. The related notes ordinarily comprise a summary of significant accounting policies and other explanatory information. The term financial statements ordinarily refers a complete set of financial statements as determined by the requirements of the applicable financial reporting framework, but can also refer the single financial statement according to the accounting standard. According to the accounting standard, um, that financial statement include LKS. So you should know this statement, the definition according to this. mm, According to the standard, financial statements mm, here um, a structured representation of historical financial information, including related notes. That is financial performance, financial position, related notes, accounting policies, disclosures, everything, explanatory informations, accounting policies, right? Everything, all complete set of financial statement that determined by the financial reporting framework. The accounting standard listed the financial statement. Here also the explanatory notes. They are categories of or components of financial statement listed here. The explanatory note. We can see this. These financial statements comprise balance sheet of financial position, statement of income or statement of operation, statement of retaining earning, statement of cash flows, statement of assets and liabilities that does not include owners, include owner's equity, statement of changes in owner's equity, statement of revenue and expenses, statement of operation by product or line. That is paragraph A8 in the standard, the auditing standard. that explanatory note A8, you can find the set of financial statement. Here, definition is given here. Historical financial information. Information expressed in financial terms in relation to the particular entity derived primarily from that entity's accounting system about economic event occurring in past time period or about economic conditions or circumstances at point in time in that past. So this definition, I think you can understand historical financial information. Then management. Management is a person with executive responsible for conduct of entities operation. For some entities in some jurisdiction, management includes some or all of those charged with governance, for example, executive members of the governance board or owners management. So what is, you should know what is management, right? So these are the few important definition you should know, right? Financial statement, auditor's financial statements, historical finances information, then management. These definitions are often tested in the examination point, right? So you must keep in mind these definitions. You must memorize. Then we will come to the requirements. In the standard, there are requirements according to the standard. That is a other part, right? Other part. These are the one part. Other part requirements according to the standard. One is ethical requirements. Ethical requirements you should fulfill when you are planned, performing, and reporting, right? Then professional skepticism. Other requirements is professional judgment. Other one, obtaining sufficient, appropriate audit evidence. Right. These are the core requirements we have to study in brief. You can, first is ethical requirements. Second one, professional skepticism. Third one, professional judgment. Fourth one, obtaining sufficient and appropriate audit evidence. These are the four requirements according to this standard. Auditors required to fulfill according to the standard, right? So we are having 10 minutes. After 1 or 2, first is ethical requirements. Auditors should comply with relevant ethical requirements, including those pertaining to independence, relating to financial statement, audit engagement. First is ethical requirements. We'll see what are the ethical requirements. In detail is given paragraph A14 to A17. We'll see this. A14 to A17, the explanatory note. These are the ethical requirements. Auditor is subject to relevant ethical requirements, including those pertaining to independence, relating to financial statement audit engagement. Relevant ethical requirements ordinarily comprise Part A and B of the Code of Ethics for the Professional Accountant issued by the Institute of Chartered Accountants, Sri Lanka, CA Sri Lanka, related to an audit of financial statements together with the national requirements that are more restrictive. So, according to these ethical requirements are published in the Code of Ethics, Part A and B of the um, uh, document published by the Institute of Chartered Accountants. These requirements are given in detail, right? So I am going to discuss in detail. So you should know what are those requirements, right? The first is a independence. So you should know what is independence, right? Auditor should be a independent to the audit entities, completely outside. That means the first class I explained, if you are an auditor, you should not involve in the preparation of the financial statements, or you should not be an employee. You should not be a partner, or you should not be a investors or future investors or buyer or supplier or customer. If you are in those capacity, you are rated as not independent. Right? Independent means completely outside. So likewise, in the constitution, you can find the auditor general is appointed by the according to the constitution president. That's more independent. Likewise, election commissioner, likewise attorney general, auditor generals, all are appointed by the according to the constitutional provisions. The recommendation given by the constitutional council and appointed by the president. That is more independent, right? So the Companies Act also given auditors independence. That is a independence. If you are having any financial interest on the auditing organization, you should not be an independent person. You can't be auditor. So that is a basic principle. Is a independent. So in addition to that, integrity. Integrity means you must be honest. So that is given in detail in the Code of Ethics. When you read, you can understand more what is integrity. One other one is objectivity. Auditor should consider the objectivity of the stakeholders, the users of the financial statement. Different users using the financial statement and audit report for the different decision making purpose. So auditor should consider the objectivity. Then other one is a professional competence. That this work, audit work, can be carried out only the professional competent person. So if you are a complete degree course, you are not competent enough to carry out the audit work. If you are a chartered accountant, is a competent person because you are a theoretical part. Exam you must pass 4 or 5 stages. Now four stages. Then in addition to that, you have to complete your training period 4 years. Then only you can become a professional competent person. Otherwise, if you are even only you complete the examination, you are not issued the practicing certificate. So if you get a if you want to get a practicing certificate, you must complete training as well as examination. So professional competence. It should be this work can be carried out only competence person. Other person competency is achieved through the educational qualification plus training. So if you want to become a doctor, both you need engineer, lawyers, every professional they must maintain some professional competency and due care. Due care means you must take extra effort. Whatever you are doing due care. Something mistake, court will see whether you are apply the due care in the work. If the surgery, if the doctor carrying out surgery, that after completion of surgery, if you found some material scissors or something inside the stomach and put switches, the patient suffered after completing this surgery. So if you found that doctor made a mistake in the surgery, court will check whether the expected ability and care, due professional care is applied. Or if you are not applied due care, you may charge to duty of negligence. Negligence. Likewise, auditors are also, there are several court cases against the auditors charged absence of due care. That is a duty of negligence. So you must expected to apply this due care. That plan karna kota, performance karna kota, varta karna kota, everywhere you must apply this principle, due care. Other one is confidentiality, ragasya bhava, ragasyam perner, ragasya bhava. You should not disclose the client information without permission of the clients, right? Unless if it is illegal in the court of law. If you are auditor of the particular company, manufacturing company, you should not disclose the manufacturing information. You are entitled, you are right to get all those information, but this information without client permission, you should not disclose to others. Unless if it is illegal. If you found after appointing as an auditor, you found some smuggling business or brothel business is going on, that is court of law, which is illegal. So you can, in this situation, you can break this principle. You can inform to the law enforcement authority or police. Unless otherwise, you should maintain the confidentiality. So you, without getting permission from the client, the auditing institution, you should not disclose to others. Then professional behavior. Professional behavior is how to behave, how to dress, how to talk, how to behave in a certain situation. So everything is called professional behavior. So these 5 principles that you can see in detail in the publication document published by the CSL and the Part A and B, Code of Ethics. This is a critical requirements to be followed by the auditor in addition to the independence, integrity, objectivity, professional competence and due care, confidentiality and professional behavior. These 5 principles are called ethical principle, or that is our first requirements. According to the requirements, first requirements are these, right? So we can discuss other requirements in brief: professional skepticism, professional judgment, sufficient and appropriate audit evidence. In brief, next class. Before that, I will give you some questions on this area. Right? Please write down. That I have given some questions earlier. How many questions I have given? I think 15.
16, sir.
Sorry?
16.
16. You write down 17. Uh, 17 you can write down. Briefly explain purpose of audit. Briefly explain purpose of audit. as mentioned in SLA US 200, as mentioned in SLA US 200, that is 17. That is 17. I hope you have already down. 18. State the responsibilities parties. State the responsibility parties of the state the responsibilities parties of the preparation and presentation of the financial statement. Uh, 19. 19. Reasonable assurance is a high level assurance. Even though this assurance is uh, less than 100%. Less than 100%. Less than not 100%, less than absolute assurance. Less than absolute assurance. Less than absolute assurance. Full stop. Discuss. Discuss. Number 20. Number 20. What do you understand? What do you understand by what do you understand by what do you understand by concept of materiality? Concept of materiality. What do you understand by concept of materiality? What do you understand by concept of materiality? Number 20, isn't it? What is the number? Next question. Students, what is the next question number?
21, sir.
21. Some of the students are left before winding a lecture. Some of the out of 72, now 58. It is not acceptable that these questions are very important. That if they are not fully attended the class, they will suffer the consequences, right? That is from the 72 at the beginning, 72 or 76. Now the 58. Before winding up the class, now the attendance reduced. Unless otherwise fully attend the class, it is difficult. Your attendance, right? So next question. State that state overall objective of the auditor. State overall objective of the auditor as stated in SLA US 200, as stated in the SLA US 200. There are two objectives I have explained. Two objective, overall objective. You must brief them. Next one. 23rd. Define the following terms. Define the following terms. Define the following terms. A. Applicable financial reporting framework. B. Audit evidence. C. Audit risk. A. Applicable financial reporting framework. B. Audit evidence. C. Audit risk. D. Auditor. F. Financial statement. G. Management. G. Management. Next 24, isn't it? Before the last one. Next one, 24.
23, sir.
23, sorry. 23. List the requirements. List the 4 requirements. List the 4 requirements. Auditor should comply. Auditor should comply. List the requirements. The auditor should comply. In carrying out audit of financial statement, in audit of financial statement, as per SLA US 200. Last one, what is the number, students? 20. Last one,
24, sir.
24. Briefly explain the fundamental principles of professional ethics. Professional ethics relevant to the auditor, When conducting an audit of financial statements, when conducting an audit of financial statement, within the bracket you can put ethical principles, uh, uh, ethical requirements. Within the bracket you can put ethical requirements. Altogether, I have given 24 questions, isn't it? Is it correct,
Yes.
students?
Yes.
Right. That I am going to wind up at this point. According to the requirements, one requirements we have discussed. What is that requirements? Ethical principle we discussed. Remaining three requirements are there. What are those requirements? Professional skepticism, professional judgment, and sufficient and appropriate audit evidence. These requirements we will discuss in brief next lecture program. In the next lecture program, we will start the terms of engagement, that is SLA US 210. Next standard we can discuss, especially Sri Lanka Auditing Standard 210. After completing this balance part, the requirements you must keep in mind, right? You should update everything, right? The previous class, this class, everything you should update. So if there are any, I am going to wind up, students. If you have any things to discuss, can you please? Someone asked 19th question. What is the 19th questions? You can ask from your friends. The time is in the chat. There is a message. Can you please tell the 19th question? What is the 19th one, students? I forgot. Then question number 19, I forgot. You try to get it from your friends. So anything you want to ask? Any comments? If you okay, we can wind up reasonable assurance. Uh, right. That's question number 19. Reasonable assurance is a high-level assurance, even though this assurance is less than absolute assurance. Discuss. This is the question number 19. Fine. So, any comments? So we can. Okay, fine. If you have any, if you do not have any comments or anything to discuss, we can wind up. We can meet the next class. Thank you very much for your participation. Okay, thank you very much.